Hello and a warm welcome. You've joined us on this very special edition of ET Now Insight. I'm Ashesha Adwari. With me is Shrishti Sharma. And today on the show, we will put the spotlight on India's IT sector. And the IT sector is at crossroads. On one hand, a rate cut scenario augurs well for sentiment. Valuations are back at near 5-year averages for the entire sector. And margins likely are going to improve with a softer rupee. But on the other hand, the street remains cautious. One, because services exports are losing shine in product-heavy US markets. Indian IT has missed out on the AI and semiconductor buzz, and the divergence with Nasdaq is stark. Hiring trends remain muted, and outsourcing concerns resurface with the Hire Act. Against this backdrop, let's get started with a special discussion on India's IT sector.
Well, indeed, Ashesha, it has to be, given the fact that today and even the day yesterday, we have seen such great moves on the IT space. And this is coming after a long while now, because after the earnings, we haven't seen that cheer coming back on the IT. So for so many factors that you just highlighted. But yes, is there a case that where one needs to relook at the sector at this point in time? We will try to find an answer to all of that. And firstly, let me take it across to my colleague Sharad as well as Varun, who are joining us with the bull versus bear case for the Indian IT space. Which are the factors that are at play? Over to you guys.
Okay, so I would be the bull for IT sector and Sharad is going to be the bear, and let me put forward my first argument, that's the bull case. And see, for Indian IT company, the most important thing is the US markets. And if you look in the US market, the most important thing now is the interest rate cut. And after the recent economic data, people are expecting an interest rate cut in the September policy and also going ahead. So definitely this will actually increase the overall discretionary spending, and that will impact the overall Indian IT sector. So that's my first point, and that is the US market and the rate cuts.
Well, yes, Varun, that's a good point you have raised. But do remember, Indian IT companies and the global companies, there's a difference. The global companies are product-based. That's why they command a valuation premium in the markets. And no such premium is coming in for the Indian IT space, if you look at it. They are largely service-based. So this is, of course, you could say this entire year there has been an underperformance also in the IT stocks. It's just been 2 days of growth coming in the IT space.
But if you look at the management confidence, it comes from the Infosys buyback. On the 11th of September, Infosys has a board meeting. They are going to decide on the buyback, and it's after a long time that our IT company is coming with a buyback that eventually gives confidence among the investors that yes, there is a lot of strength still remaining in the overall IT space.
Well, yes, for shareholders it is good, but for the industry, not major investments coming in when it comes to R&D and AI, and that also gives a question in the industry. Also, there's a lack of names coming in when it comes to the AI or even the semiconductor race. We do not have actually a proper semiconductor setup, and neither we are having a full-fledged AI company. We are having some integrations, smaller ones.
But if you look at the overall commentary of several global giants and also the new clients, they are actually promising. Look at the commentary of Oracle Finance. After the commentary, the stock has shown a good jump. Also look at the commentary of United Health, which is one of the biggest client of Persistent System. Also, brokerage houses have upgraded the stock. So if you look at the global scenario, it is actually improving.
Well, yes, the mid-cap space is actually improving, Varun. That's a great point. But the divergence is very big. First, you look at the Nasdaq. This year itself, Nasdaq is up 13%. And the Nifty IT index, I'm looking for gains, and there aren't such gains. It's 14% down.
That actually shows you that the valuations are cheap, especially if you look at the major IT companies, Indian IT companies. The overall valuation after the recent fall have actually become lucrative, and this is the right time to buy the Indian IT companies.
Well, of course, the valuations have turned cheap, but the earnings have not been that strong, especially the hiring trends. That has been confusion for the last 2 odd quarters, and a lot of companies haven't even given their guidance yet.
The hiring trends are not strong. Also, the results were not that good. But yes, the companies are now diversifying. If you look at some of the good companies like TCS, they have recently got an order of around 550 million euros from the European countries. So yes, US might be a problem that has created problem in the overall earnings, but they are diversifying, and that would be a big tailwind for these companies.
Well, yes, but US is creating one more problem, Varun, and that is the Hire Act. Of course, it's put out in the Senate. And interestingly, the question mark comes is on outsourcing. They are focusing much more on local labor. Right. And India is an outsourcing theme also in the export space. So that's a point which I was to ponder upon.
But actually, that's a positive point for Indian companies, because if you look, the rupee is actually depreciating and Indian companies are actually exporting. So definitely they earn in dollars and definitely this will impact the overall earnings of these companies, and it is expected that the margins from here are expected to rise also.
Well, yes, margins, there is a very good, strong tailwind coming in. But the revenue is something which I am concerned because AI billings might be there and that might
Right.
concern the IT companies. The work which was done by, say, 10 people in a group can be done at 4 people now. So that might be an error as well.
Okay.
So there's a lot of confusion here. Short-term basis, of course, Varun is winning with his bull case scenarios. But long-term, should we be cautious for IT? That's a question which we are looking out for.
That's how the fundamental setup is looking like for India's IT sector. Sharad and Varun, thanks so much for joining us with all those details. But what's next for Indian IT in terms of technicals? Kunal is now joining us to break that down for us. Kunal, take it away.
Thank you so much for that, Ashisha. So I'll join Varun's camp over here and indicate that why the Nifty IT index is going through a potential a turnaround both on the short term as well as on the long term charts. Now, this is a very short term trend for the Nifty IT index. How the index was beaten down significantly from the July highs of 39,500. We fell down as much as 5,500 points on the Nifty IT index. More importantly, after spending time almost a couple of months over here in this tight range, we are looking at a potential breakout which could happen for the IT index, and this could potentially be a good breakout for the IT index because this is almost like a 2,000 to 2,500 point consolidation for the IT index. So this could be very, very interesting for the near-term prospects. Now comes the chart perspective from the long-term play. Now there has to be a point where the Nifty IT index gets into an oversold territory and it sees periodic bounces. We've looked at the charts over the last many years, and apparently this 40-day exponential moving average on the monthly charts I think is a very strong support territory for the IT index. And if you've seen multiple times when the IT index has gone through a correction, the retracement happens at this 40 monthly moving average, and then from there starts the process of rebuilding, as well as a point where the risk reward becomes extremely in favor for the IT index. A more recent one was in 2022-23, where the IT index fell from 40,000 to sub 30,000 levels. The correction halted at this key moving average, and then started the building blocks of a fresh rally which lasted for at least another 2 to 3 years. We are almost at the same point of the Nifty IT index in terms of the charts. So this could be something which is very, very critical, and this indicates that this could be a good value buy territory even from a long-term perspective. Just to end with one perspective, Infosys, I think that's been the trigger point for the entire rally on the IT index. The last time when Infosys announced a buyback was in 2022. I think 13th of October, if I'm not wrong, was the date when the buyback was announced. The stock was almost at 1420 levels. It started off with a gap up opening, 5% uptick. But then what followed over the next 1 month was almost like a 240-point rally for Infosys. So it may not be a short-lived move. We are seeing a very similar kind of a move for Infosys this time around after that 5% up move which the stock has seen yesterday. So to sum it up, I believe that the IT index is in for a good revival, both on the short term as well as on the long term charts.
All right, very interesting data points there. But thank you so much, Kunal, for taking us with all those details. But with this, let's take the discussion forward and let's understand that fundamentally what could be in store for the IT space. We have Sandip Agarwal, fund manager at Sovilio Investment Managers, joining us on the show. And Sandip, hi, good afternoon, and good to be speaking with you. And Sandip, let's talk about the latest trigger domestically, that is the Infosys buyback. Now the buyback has been announced. There were some hopes that maybe some other companies can also follow the suit in order to reward the shareholders. So Sandeep, firstly, help us with your take on how do you see this buyback announcement coming at a time where the investors were not having that much of a confidence on the growth outlook going ahead? And can other companies too follow the suit and announce buybacks? Is that a possibility?
Hey, hi, good afternoon, and thanks for having me on the show. So I will answer this question, and then I will also put forward 3 positives and 3 negatives, like just bull and bear for the sector, not for the company, because we run a PMS, so can't comment on any company. But let me put it this way, that IT sector in general generates huge amount of money, cash, and they work with the Fortune 500 companies, so the amount of working capital required is also very less. So whatever money they earn as PAT, mostly almost 90% of that is free cash flow. And because of that, if they don't distribute this cash in form of dividend or in form of buyback, generally it hurts their return ratios, because unnecessarily the return ratios looks very low because of high cash in the balance sheet. So they will have to continue to distribute both dividend and will have to do buyback whenever they accumulate cash. So right now, if you see, the accumulation of cash has been very significant in last 2 years. I believe that most of them will have to come and will have to do the buyback. So that answers your question on the buyback. Uh, I would like to, now answer on the sector also. As I have mentioned earlier multiple times that this sector is a X growth kind of sector on the large names, because what has happened is the penetration level of outsourcing in the larger market like US is very, very high. If you leave aside BPO from India's total exports, then probably we are at 95% of the global outsourcing which is happening. We already have 95-96% market share if you include the GCCs. So then there is no further much scope for gaining market share or growth. So this sector for the large cap will be like low to high single digit for a long term, and for mid-sized companies it could be low double digits, and for small companies it could be higher. And also wage inflation is happening every year, which fortunately is being taken care of by rupee depreciation. So your earnings growth will also be single digit for large companies and maybe low double digit for the mid companies. And now you apply the price earning ratios. Most of the companies are trading between 4 to 8 times PEG ratio for an industry which is now X growth. So this is the big challenge which is there, and that is the reason, as already mentioned, if you see last 2-3 years, the sector has gone up and come back at the similar level, at least for the large caps. So that is the scenario which we are going through.
Understood. So that's your point with respect to valuations. But Sandeep, also wanted your thoughts if you've had interactions with the management. What is the kind of order booking that these companies are witnessing at this point in time? What is the commentary looking like, especially in the backdrop of a 25 basis point rate cut that is expected from Fed in its meeting next week? What is the sense that you're getting from managements on ground when it comes to order inflows?
No, so if you hear what managements are saying on various media channels, and we also interact with the smaller company managements on a regular basis, what we understand is that what has happened pre-COVID, the deals were of different type. They were much bigger. Post-COVID, quick implementation of digital became mainstream, and the sizes of deals went down, but execution period also went down substantially. So you saw very high growth for the mid-sized companies. And now, post this disruption of AI, what we are seeing, the deals have even become much smaller. So they are generally, whoever can quickly turn them around will see better growth in the revenues. But and I would not say that large companies are not getting. In fact, always large companies will get the lion's share of any new technology, new deals which come. Problem is that by the time those deals make a material difference to their revenue growth, it takes long time. Secondly, the deal sizes themselves are falling very, very substantially. And third, this is the first disruption in the last 30-35 years where efforts are going down. Till now, all disruptions of last 30 years, technology has transitioned from one technology to another, which means that you have to retrain, reskill your workforce, and you get the new work. But this time the efforts are going down, and because efforts are going down in such a big way, you have to not only make up that loss of revenue because of efforts going down, you also have to scout for more growth. So I think we are definitely in a challenging situation for the large companies. It will be tough to grow more than mid single digits or low high digit or 6-7% growth. And for the mid-sized companies also more than 10-12% growth will be a challenge, and small size companies maybe 15-20% selectively. That is the way we look at the whole sector. This situation is totally different than all the transitions we have seen in last 30 years. I believe that there is a significant impact on the efforts which are required to execute the work.
All right, that's the take coming in on the sector growth outlook. But Sandeep, of late, the other talking point for the IT space is turning out to be the Hire Act, wherein a 25% tax is being proposed on certain payments US taxpayer makes to the foreign persons for services that benefit the US consumers. But along with that, the Indian IT, as we know, that has a major exposure to the US markets. Along with that, and yes, there are some concerns, but how do you view this? Do you see that getting this act in legislation and in work Is that a possibility, or for now, the overall sector can really ignore this in the time being?
See, I won't say we can ignore it because you don't know what happens. The Trump, being Trump, he can enforce something. But I will tell you my experience since 2004. I have been seeing at least 4 or 5 times these attempts have been made in some or other form, which is detrimental to Indian IT services. But we have seen that they have finally impacted badly the US companies, and they have also impacted the margins of Indian companies. So 2014 onwards, if you see, the margin of the industry has gone down for the large cap in a substantial way. And this has happened because the on-site hiring has gone up substantially. And in case of on-site hiring, the costs are disproportionately high. Number one. Number two, they are not so fungible as the Indian resources generally are, because once a person leaves Indian borders, then he is fine to work from any city in the US. He's more agile and fungible, whereas compared to that, a US worker will prefer to be on his base location. So the actual utilization which you get from the resources is much lower when you hire locals than in people who you send from India. So it is detrimental to margins and everything. I don't think that you can blanketly apply a 25% or something. It can happen for a short period of time, then it has to be reversed, because these companies will not be able to work or survive, and that I think most of the US corporates know. But yes, they can ask for little more focus on local hiring. But problem is that after Lehman crisis, there has not been a situation where there has been a big unemployment in the US in the technology software services side. So where will you get manpower even if you apply this act? And also, I think this is more of a macro impact rather than actually on ground doing assessment and bringing in something. That is the way we look at it.
So that's as far as the Hire Act is concerned. But Sandeep, since AI is also the buzz of the town, if a retail investor wants to enjoy this AI wave, what would your recommendation be? I understand the broad consensus is that Indian IT companies have missed the AI buzz. But what will your recommendation be then to enjoy this AI wave? Will it be through global IT companies then?
So I don't agree to the point that Indian IT companies have missed the bus. We are the ones who will finally do it. We will be providing the services and all. The challenge is that the effort of AI, its effort is going down by 30%, so that you cannot make up. But all these large, small, mid-sized Indian IT companies will be finally executing those deals. It cannot be done by anyone else. It is a matter of time. We will reskill, retrain our workforce. But for investors in India, I think. You have to look more for more and more smaller companies. As I said, the deal sizes are now $50,000, $100,000, $200,000, and those numbers are material to very small companies. So you have to find those companies, and probably you will make more returns. So this is a very clear phase which we are saying. Pre 2019, any disruption which came, the biggest beneficiary were the large cap, followed by mid and small. Post COVID, the biggest beneficiaries were the mid caps like Mindtree, LTTS, LTI, Persistent. All of them went up 8 to 10 times in 2 years. And this wave, I think the biggest beneficiary will be very small size companies, which will be disproportionate beneficiary of this evolution. So we believe that for the large caps, the peg ratios are very, very high, and for the mid caps also. But for small cap, you can see some good growth, and the peg ratios may look reasonable.
Right, interesting take when it comes to the IT space. But Sandeep, with this, we let you go on that. Thank you so much for taking the time out and speaking with us on a whole host of factors that are likely at play when it comes to the Indian IT space.
Thank you.
But for this, viewers, let's move on and let's also get you the word from some of the other market experts as well. And firstly, with respect to the AI, world is amidst an AI mania. That's the word coming in from Manish Chokani, Director of Enams Holding. Let's find out what is his view on the IT space.
The world seems to be in the middle of this incredible mania in AI. And if you don't have an AI play, nobody's really interested in you. So whether it's the big 6 US stocks, or indeed money has started flowing out even into China, which was not a very favored market, into stuff like that ever since DeepSeek came out. So people are just so starved for growth that one big area has become this AI field and everything ancillary to that, whether it's data center or energy and so on. From a productivity perspective, which is now what this AI is going to lead to, the biggest users of kind of qualified data are actually the financials, because they're just sitting on enormous data. I mean, you look at your screen, it's just filled with data. And as you start applying a lot more intelligence to it, you don't need to have so much human intervention anymore. So while the coding need for the IT companies is going to go down, the usage of AI in the financial space is going to be going up and make them a lot more productive.
That's the word coming in from Manish Chokhani. But Sandeep Tandon, CIO of Quant Mutual Fund, says that Indian IT sector has the potential to outperform in the next 6-month period. Listen into his rationale.
We have been very bearish on IT for a while, and now if you look at last month fact sheet and last 1 month, we have built some of the IT exposure because they reached that desired neglected space where people have given up, and the noise was so negative that people were not even willing to talk about the technology names, and this additional worry on the taxes will be applicable in the services. So that could be the peak of this crisis which we saw last week. We have been slightly constructive now. I'm not saying that we are going all out and building a very large exposure, because I think earnings cycle is yet to bottom out. My own estimate is that maybe by September quarter, earnings cycle should bottom out, and maybe December quarter you might see first uptick in the IT space also, and hopefully by the time our tariff related challenges should also settle down, so it can be a sentiment booster. So negative news will be completely discounted, and maybe looking for earning upgrade under ownership is there, and if market moves up, I think this is one sector which has underperformed, so it has potential to outperform from the next 6 to 8 months perspective, or 6 to 12 months perspective.
All right, but it's not just the market experts that are talking about the AI, but it's the finance minister herself sharing her take. And in an exclusive interaction with Times Network, Finance Minister Nirmala Sitharaman discussed the immense potential of artificial intelligence, which is expected to drive major efficiency improvements across industries. With the growing demand for skilled professionals in AI, India's tech sector is rapidly realigning its business models to meet this future demand. Let's go across and listen in.
आर्टिफिशियल इंटेलिजेंस में जितना आप ये जॉब रिस्क है ऐसे आर्ग्यूमेंट करते आएंगे, उतना ही मैं ये भी कहूँ कि आर्टिफिशियल इंटेलिजेंस में स्किल्ड लोगों को इतना डिमांड है, क्योंकि आपके पास अगर वो क्षमता है, फिर आप एआई रिलेटेड जितने भी यूजर एप्स हो, टूल्स हो, वो बनाने में सक्षम रहेंगे. इसीलिए अगर आप एआई में स्किल्ड हो तो आपको ये डेंजर ज़रूर नहीं होगा. और आईटी कंपनीज भी आजकल उसी रास्ते पे चलते हुए उनके बिजनेस मॉडल को परिवर्तन कर रहे हैं. उसके कारण उनके बिजनेस भी आगे बढ़ेगी. और एक बड़ा सा एडवांटेज एआई के वजह से है, और वो ये है कि एफिशिएंसी लेवल्स बढ़ेगी. उसके लिए बिजनेस मॉडल में एआई आज एमएसएमई सेक्टर में भी लोग सोच रहे हैं कि कैसे उससे हम बेनिफिट पाएं. इसीलिए एआई से डरने से बजाय हम उसके लिए रेडी होना चाहिए.
That's the word coming in from Finance Minister. But that's all the time we have on this edition of this special show. Thanks so much for tuning in.
Presented